Started here in just a moment. Back to Walks and Wall Street. Today is Tuesday, March 12th, 2024. It's 8:57 p.m. Eastern Time, and we are live from New York City. But more specifically, look at this. We are right here outside the beautiful 432 Park Avenue building. It was developed by Harry Mackellow, one of the most desirable buildings in the entire city. Now, I know what you guys are thinking. Obviously, today was inflation day, so we're going to be talking a lot about inflation. And you would be correct. Now, if you want to follow along with us, a good resource is to go to the Bureau of Labor Statistics website. If you want the exact link, just go ahead and type !CPI in the chat. Once again, that's !CPI in the chat, and it's going to bring you to an infographic that I think is pretty helpful. It's the 12-month percentage change of the Consumer Price Index, broken down by category. Give me one moment. Hold on one second. Sorry, I just had to silence my phone. But yeah, inflation coming in a little bit hotter than expected. Which is a little bit of a concern. We'll talk about exactly what that means. But CPI, in terms of the headline number, rose about 0.4% in February. That's on a month-over-month basis. And on a year-over-year basis, inflation increased about 3.2%. Now, that's the headline number. That includes very volatile food and energy. If we flip over to core inflation, which is what the Federal Reserve puts a little bit more weighting on, we also rose about 0.4% in February, terms on a month-over-month basis, and inflation ticked up 3.8% year over year. The interesting thing about this, as the trend continues, the vast majority of inflation is being caused by shelter. Now, this is an interesting statistic because over 60% of the entire increase in the month of February was attributed to, yes, you guessed it, number one, shelter costs, and number two, actually, gasoline. We had gasoline prices tick up a little bit here in the United States. So shelter has been a real big pain point, but the good news is, on a year-over-year basis, we continue to see consistent and steady deceleration in shelter costs. Now, this is where it's important to kind of follow along here. So let me clip the microphone on. And we talk about kind of in order of liquidity. I know we talk about it a lot, but it's very important that we realize this. So this is the 12-month sort of look back, or the 12-month percent change, I should say, a year-over-year percent change in shelter costs. Now, if you type !CPI in the chat, you'll get all this. But we actually declined yet again on a year-over-year basis. So shelter is now below 6% per annum increase. January of 2024, we increased 6%, and then the most recent reading that we just got, which would be for February on a year-over-year basis, we only increased about 5.7%. Still a little ridiculous, still a little crazy, obviously very elevated, but there is no doubt that we continue to see this year-over-year trend of deceleration in shelter, which I think is going to continue. Obviously, as we know, as the Federal Reserve starts to tighten monetary policy by raising interest rates and letting assets roll off of its balance sheet, the asset classes that are the most liquid, right? The closer you are to liquidity, the faster they reprice for a higher interest rate environment. Real estate's a little bit less liquid, so we're seeing slowly but surely declines there in shelter. Now, the main concern, I should say, is with the headline number overall. So if we look back to June of 2023, we hit a low for inflation of 3%. We peaked all the way back in June of 2022. We'll quickly show you here. So this is actually an infographic of the headline inflation number. So you can see very clearly headline inflation peaked at 9.1% in June of 2022, and we collapsed pretty much all the way down to 3% in June of 2023. But we've been chopping around and kind of trading around in this 3% range for 6 months now, which begs the question, will we ever get inflation back down to that 2% target that the Federal Reserve is looking at or is looking for? We'll talk about it, we'll see. Lastly, another great resource for you guys, because we're going to be talking about monetary policy a lot tonight. Go ahead and type !CME in the chat. Once again, !CME in the chat. And it's going to bring you to the CME Fed Watch tool. Now, there's officially 7 days, 16 hours, 57 minutes until the next FOMC meeting, which stands for Federal Open Market Committee meeting. That's going to be taking place on March 20th. Now, currently, there's pretty much a 0% chance of a rate cut at the next Fed meeting. And we continuously see probabilities for rate cuts at all of the preceding meetings continue to go down quite materially just from the last few weeks. And that's really due to, this obviously elevated inflation reading. All right, guys, I'm going to go ahead and close up the laptop here. We'll say hello to everybody in the chat, and we'll have a little chat about the markets. But today we are going to be headed towards Hell's Kitchen. It's finally nice out, 60 degrees, it's not raining, it's not nasty. So I think it'll be quite nice to kind of walk around. Last but not least, everybody, this Thursday, go ahead and make sure you check your email, because we are going to be emailing out our 4th issue of the Behind the Street newsletter to your email box. We're going to break down the inflation report that we just got out. We're going to give an outlook on monetary policy. We're going to be talking about emerging markets and the strength, the resiliency that we've been seeing in U.S. equities. So go ahead and scan that QR code on the screen if you want to sign up for our Substack, absolutely free. And we'll go ahead and get started. Thank you all for joining. All right, everybody, let's see what we got. Let's see what we got going on here in the big city. Once again, we're reporting live right outside of 432 Park Avenue. It's a beautiful, beautiful night. Let's give one more quick look at the building right here. And we will be on our way. Jack 12, Gary Carpenter, Teresa Diaz, Dr. Carl, what's going on? Thanks so much for joining us. Gene is here, Gene 1649. Welcome, Gene. I see Trade is here. What's going on? Chili Bill, what's going on? Peter, welcome, welcome. Sarah, thank you for joining us. We pretty much have the whole crew here. Dan Sang says, hey Tom, nice weather. Yeah, thank God. Beautiful day today in the city. You know, I think we hit a high of 65 degrees in Manhattan, but it kind of felt a little bit warmer than that. I spent the majority of the day today actually in Brooklyn. I was checking out some new development projects, particularly in Red Hook, Brooklyn. So hopefully we have a few more deals working and we should be good. Poto's here, what's going on? Thanks for joining. 446. Vinny says finally some nice weather. Indeed. All right, guys, let's talk about this inflation print. Trades stands out to me that CPI comes in hot, yet odds increase for a cut, even when with a stable labor market. Peter says when the government is spending $1 trillion more than it takes in, you can expect inflation by money printing. It will continue in the coming months at the 3% plus rate. Yeah, I mean, you know, the concern here is that 3% is the new 2%, which is, you know, a little bit concerning. Also, if you look at the individual categories, so if it's important to actually go to the Bureau of Labor Statistics website and look at that PDF printout, because they give everything in terms of a percent change on a month-over-month basis and on a year-over-year basis. And even though food was flat month-over-month, we still had, I think, what was it, a 2% increase year-over-year in food costs. I think it was like 2.2%, but food away from home, I mean, really got cranking year-over-year. Which I totally agree with, by the way. Chances are, if you've ever gone out to eat in a big city, prices are significantly higher than they were just a few years ago. I really started to notice this in Miami specifically. The building we're looking at now is 425 Park. But I just came back from Miami 2 days ago, and I was going out to eat at some of the restaurants in downtown Miami and Brickell, and my God, is it expensive. Like, almost as expensive as New York City, and it never really used to be like that. I think just because you had more people moving to South Florida in general, starting with the pandemic and the like, you know, I don't know, what are you guys seeing? Do you see that when you go out to eat, is it obviously a lot more expensive than what you were kind of paying year over year? I don't know. For me, things have gotten really, really crazy. Hey, Poto says, get used to it, 3% ain't bad. Yeah, in terms of the rest of the world. In terms of the rest of the world, I agree. Jimmy T, what's up? This is the Ferrari showroom here on Park Avenue. Yeah, I mean, the biggest concern obviously is everything that's important, I should say everything that's most important in the average American's life. Number one, you got to put a roof over your head, you got to pay your rent, you got to pay your mortgage, right? So that would fall under shelter costs. And number two, you got to eat, or else you'll starve to death and die. So the two categories that are most important, near and dear, we've been struggling on kind of taming those. Now, I think shelter is going to continue to work its way down. We've had, I think, 12 consecutive months, or over 12 consecutive, I should say year-over-year percent changes in shelter declines, which is good. But it's not necessarily the fact that shelter is going down, it's just going up less fast, if that makes sense. And this really hurts Americans living on a fixed income, because your expenditures continue to go up, but a lot of seniors are living on fixed incomes. They're living off Social Security, maybe they're taking a draw from their retirement accounts, their 401ks. If you remember correctly, or if you remember from last night's live stream, we talked about that Wall Street Journal article that came out where they pulled some data, and in the year 2023, going into 2024, we've hit records for Americans drawing down on their 401ks for emergency withdrawals. And that can include anything to pay medical expenses, to prevent foreclosure on your home. So more and more people, right, as we head into this inflationary environment, seem to be needing to dip into their 401ks to sustain their lifestyle. So it seems, right, according to the Wall Street Journal. Now, could you imagine if we didn't have this very strong performance in the equity market? I was thinking about that today. That's a big concern, because what's bailing a lot of us out right now is very, very strong action in the stock market, in the equity market. This is the Seagram building. We're actually going to cross the street and check it out. But 401k and retirement balances are at all-time record highs, because the S&P 500 is trading near record highs, the NASDAQ, the Dow Jones Industrial Average. So I think that's really the one thing that's kind of keeping this boat afloat, so to speak. Earnings have been good, that's another thing. Obviously, that's driving price. Employment is strong, right? We have very low unemployment in the United States. Hey, Robert Parker, what's going on? I am enjoying this 60-degree day, my friend. It's beautiful. Walking down Park Avenue. DC322 says the issue is that most of us aren't financially literate. Brian M says bullish on Kellogg with food getting this expensive. Yeah, they just have to maintain their margins, right? So long as there's no margin compression. Peter says no item is coming down in price, i.e. deflation. That is why everyone is upset with their economic lifestyle. Relative decrease doesn't mean inflation isn't rising. It just means slower increases, says Peter, and I agree. Joel PM says on my last outing, I picked up a chopped brisket sandwich with no sides. To go, paid $16 and left no tip. Wow. TK Porsche says if you're retired on fixed income or a low wage worker without bargaining power, ongoing 3% inflation is going to be a disaster. I think I agree. I think I agree with you. And this is why I really think that the Fed would be making a big mistake here if they cut interest rates this summer. Just a little bit of anecdotal data for you guys. So I'm working with this buyer, right? Really nice lady, very well capitalized, like serious buyer. And I've been taking her all around Brooklyn, and we were about to put in 2 offers on places that we've seen that they're really, really good. And turns out both of those places just went under contract. So in the New York City market, right, speaking about, Manhattan, the boroughs like Brooklyn, things like that, deals are still getting done. And a lot of the offers that sellers are getting are still pretty strong. I mean, a lot of these deals are all cash deals, a little bit below asking, and things are cooking in the market, right? Transactions are getting done. So could you imagine, right? Could you just imagine for a second if the Federal Reserve comes in June, right, over the summer, and cuts the Fed funds rate from its current range of 5.25% to 5.5%, you know, that is going to have trickle-down effects, put pressure on yields, and you'd probably have mortgage rates come down even more, which, you know, we don't have to be economic geniuses here. Where do we think that's going to send prices of homes, right? Going to send it skyward. Because the problem is, and, you know, not to sort of ramble on too much, just to have a lot to think about, a lot to talk about tonight. The problem is, you know, if you go to the St. Louis Fed website, right, this is another thing that we've been talking about and writing about. Go to the St. Louis Federal Reserve website and look at cash balances in money market funds, right? There is a lot, and I'm talking about a lot of cash, ladies and gentlemen, sitting on the sidelines to the tune of over $6 trillion that is just sitting dormant in money markets. So you've essentially, you know, due to this decade of artificial suppression of interest rates, there's been so much wealth accumulation. The problem is it's been very bifurcated and lopsided in terms of the wealth accumulation, where you had the wealthier Americans continuously get even more wealthy while everybody was left behind. So even if you ease this market and the Fed tries to cut rates and stimulate, you know, we could potentially see heightened inflation, and then we kind of go back to where we made the mistake where Paul Volcker had to come in and blow interest rates out to 20%, which we don't want. So we'll see what happens. Guys, this is Blackstone. CEO and founder of Blackstone, Stephen Schwartzman, right here, 345 Park Avenue. I like walking Park Avenue at night. It's kind of relaxing. Andrew says, I am reading Billionaire's Row by Catherine Clark. Great book. Really, really great book. Let me know how you like it. I think you're going to enjoy it. It's a really interesting read. Pogo says, Tom, what's a reasonable price neighborhood in New York for someone making around $150,000? Are you talking about for rent or for purchasing? It really depends on where you want to be. Do you want to be in the boroughs? Do you want to be in the city? It just really depends. Brendan O'Brien says, Keynesian math of the need for constant inflation, or you have an invariable deflationary price spiral. Yeah, but I don't think, I think this inflation is too high. I'm just trying to catch up on comments. Let me see. The ABX girl says, hey Tom, 401k withdrawals, Arkson, hold on. My chat's acting up. Oh, are on the rise maybe? Because they could be used to prevent evictions and you could use them for medical bills? Yeah, for sure, you can. All right, yeah, let's continue down. And then we'll make a right and we'll go all the way over to Hell's Kitchen tonight, because I think there's gonna be a lot of people out. Hell's Kitchen has a lot of bars, a lot of nightlife, a lot of fun stuff. Joel PM. Yes, as a monkey could have picked a random stock a year ago and made 100 to 150% gains. The market is frothy. I would actually disagree with that take, because you've had so many bears
a ridiculous amount of bears. Even still now, I mean, I look at my Twitter feed, and everybody is so negative and so bearish. There's been most people missed this whole rally. Most people did. Is there some froth? A little bit? I guess. But, you know, the indices are only, like the S&P is only like 5% into new highs. So, you know, you start to get into the frothy territory when the S&P is, you know, up 25% into new highs, 30% into new highs, because that's when a lot of the individual stocks get cooking. But, you know, if you look at the data, a lot of people have been sidelined for this rally. A ton of people, particularly the rally in Bitcoin and gold. There's been the least amount of interest, right? And the reason why we're talking about Bitcoin so much is because we can use it to gauge investor sentiment. Now, just because Bitcoin is rocking and ripping doesn't mean that there's been a lot of retail speculation. And there hasn't, because we can actually look at the on-chain analysis from this. If you go to like Google Trends, we'll sort of talk about Google Trends first. Go to Google Trends, and since the inception of Bitcoin, interest in it, right, from the public, has actually, this is like some of the lowest levels of interest you've ever had. So really the only people in this thing are the smart money, right? Everybody is severely underinvested. So, I mean, that's just gonna add, you know, more rocket fuel to this. And that's how it always is in every market cycle, by the way. Like you go study Richard Wyckoff, right? You go study Dow theory. This is like textbook bull market behavior, where everybody misses the rally, everybody gets left behind, and then once things get cooking, the public starts to chase in at the highs. This happens every time. Yeah, one of my favorite, really, stock market operators of all time, Charles Dow and Richard Wyckoff. Those are two good areas for study there. Wyckoff theory with the composite operators. But I don't know, we'll see. It's an interesting market for sure. Very interesting. Brendan O'Brien says BTC, most liquidity sensitive asset. Liquidity from stimulus and shadow liquidity still rising, along with dollars coming back via the milkshake theory. I don't know what any of that it meant, but I'm in. I know what the dollar milkshake theory is. So that guy, I actually met him once. I forget his name. He's from California. I don't know, I also think sometimes we could be doing analysis paralysis, myself included. I think I can do analysis paralysis sometimes just because I love the market so much. Like anytime I read a lot of these macro guys and girls on the street, it's almost like they're doing like mental gymnastics sometimes. Ah, right, Amy T, Brent Johnson, yeah, I met him once. Nice, very nice guy. He's a very big gold bug. Very bullish gold. Guys, look at this. This is 432 Park. This thing is going to be so sick once it's built. I should say, once it's complete, this building is going to be amazing. There's an old saying on Wall Street that macro sounds smart but they don't make any money. That's just like a saying. Now, you shouldn't take it at face value to say that's 100% true. But I think the point in there lies that if you focus so much on the global macro, you will never get involved in anything. Because the world is a terrifying place. The world it's such a hellscape, the world. So if you really just hammer on too much on the global macro and, you know, you're like, oh, the debt to GDP ratios and, you know, population collapse and, you know, the dollar's going to go to zero and, you know, war's going to break out and everybody's going to die and there's going to be nuclear war at any time and the stock market's going to crash. If you focus on global macro all the time, you will never be invested in this market ever once. You'll miss every rally, you'll miss every opportunity because you'd be too scared to get out of bed in the morning, right? Like, and I listen to some of these global macro podcasts and I like them very much. And I think these guys are very, very smart and I have a lot of respect for them, right? Like Peter Schiff being one of them. But if you really, you know, kind of spend all your time listening to these people, I mean, you'd be lucky if you can just get yourself out of bed and go to work the next day, right? Like if you just, and I actually used to be one of those people, particularly in college. Like guys, that's all I did in college is I would sit in the computer room, study global macro like crazy, consume every single, you know, every single newsletter, podcast, research report by all these economists. And I would just be consumed with it. And I'm like, oh my God, the world is literally going to end tomorrow. But then I met people who were actually running significant amounts of money on Wall Street and running very successful portfolios, growth stock portfolios. And you kind of just have to pay attention to the earnings. You know, pay attention to individual companies' earnings. If a company is going to be earning $5 this year and they're projected to earn $20 next year, the stock is probably going to go up, right? So I guess in conclusion, not to sound super redundant, but yes, we should always be paying attention to the global macro factors, right? All the horror show that's going on in the world. But if you base that on your only thesis, you'll just never be invested ever, and you won't even get out of bed. You'll be so depressed. Hey, John Sunderland, what's going on? I love Milton Friedman and his videos. Yeah, I like his books too. He's a pure capitalist, that gentleman, right? Krog Dog says you could fill Yankee Stadium with all of the economists. Who said the market would crash by now? Well, they're right every 12 years. So all of the, you know, major economists that predict, you know, a 30% stock market crash, they're right every 12 years because the market, that tends to be the market cycle. There's usually about a 20 to 30% correction in the S&P 500. I think it's every 30-year cycle, something like that. Wow, James Davidson says, Tom, tomorrow's supposed to reach 70 degrees. Thank God, it's gonna be awesome. This city is gonna be rocking tomorrow if it's really 70 degrees. There was a lot of people out today in the city. There's a lot of people out now. I mean, we deserve it. This has been, actually it hasn't been I was about to say it's been such a horrible winter. It really hasn't actually. It's been kind of a mild winter. It snowed like maybe 2 times for like 40 minutes and that was it. Hey, Riley is here. What's going on? Sharon says, evening, Tom. Dan H says, fundamentals are dead. You can't rely on that stuff anymore. It's all about momentum and cash chasing. I respectfully disagree. I mean, look at the earnings power over the last 12 years of Apple, Amazon, Microsoft, Nvidia. I mean, there's direct correlation between earnings and price trajectory. that's kind of the model framework, right? That's why analysts at major investment banks, hedge funds, and things like that, they build those specific models, like DCF models, because they want to know what the value of a company's future cash flows are going to be, right? A big investor isn't going to invest his money into something that's just going to lose money. You're paying for the earnings, so earnings matter. Justin S. says, do you think the long-term trends with the stock market will change with AI? I don't know. I think that artificial intelligence may be the one thing that really saves the United States. Kind of thinking about it optimistically, but if you look at all this government spending, I think Peter in the chat was just saying, he brought that up in the very beginning of the stream about all of this deficit spending, right? And there's very, very smart and very well-respected fund managers on Wall Street, like Paul Tudor Jones, Stanley Druckenmiller, that have really been pounding the table about this as well. You can't just spend in perpetuity and create all this deficit spending. You're essentially, it feels good now, right? But you're essentially borrowing from the future to live a good life in the present. However, artificial intelligence may be the only thing that could bail us out of that. I was reading this McKinsey study, and I could send you guys the study, but it was also referenced in a recent Stan Druckenmiller interview on CNBC or Bloomberg. It says that AI is making the current top coders 12 times more efficient. And there was also another study, particularly in a lot of these QSR and like food beverage companies, that AI and robotics as well, we could kind of throw robotics in the mix, is going to increase gross margins across the board, right? Not only in the kind of the QSR space and food and beverage, but just talking about S&P 500 companies, right? There could potentially be a 4% gross margin increase or gross margin expansion across the board in the S&P just due to AI, machine learning, and robotics. I mean, what do you think? What do you think that's gonna do to earnings? I mean, so as operational efficiencies continue to increase, maybe that'll drive more earnings power over time. And maybe that'll help us kind of grow out of all this debt. I know it may be kind of like a pie in the sky wish, but there's always this conversation, how can we grow ourselves out of this mess that we've got ourselves in? I'm really thinking that's really the only way that we're going to be able to bail ourselves out. I mean, what do you think about it? Hey, Randy Real, what's up? The ABX girl, good to see you. Says, hey, Tom. Question with AI, do you think there will someday have universal basic income due to the job losses with AI? Possibly. Now, I guess in a perfect world, in a utopia, the best thing that could possibly happen is, AI, machine learning, and robotics essentially gets rid of all the very monotonous and tedious jobs, like the factory jobs. Like those are very, very difficult on someone's body. If you have ever known anybody or had a family friend or a parent or something like that, or even maybe some of you watching, you work in like a factory or heavy intense manufacturing, that puts like a crazy amount of stress on your body. So if we can kind of automate those jobs away, I don't think that's necessarily a bad thing. Do I think that in turn we'll need universal basic income? I think an interesting proposition may be to create some sort of fund to allocate towards people so they can retrain for a new and modern economy. Maybe something like that will happen. I don't know. Hey, Arsenal fan, thank you so much for your very generous $5 donation. Appreciate you very much. It says, hey, Tom and all, just saw the General Mills CEO interview. The whole time watching, I was thinking to myself, did his PR person take the day off? I know. It was a crazy interview. Now, for those of you who don't know what kind of they're talking about there, Arsenal fan essentially is talking about this interview that aired on CNBC, live, by the way, where the CEO came out and said, you know, there's data that's showing that more Americans are choosing to eat cereal for dinner. This is fantastic. And I think it was Carl Quintanilla was like, you think that more Americans being forced to eat cereal for dinner is a good thing? How is that a good thing? And it was just very kind of dystopian. It was very like out of touch. Now, yeah, that may be great for his company because more people are buying his product. But I don't think that's a good thing for the country that more Americans are forced to eat cereal for dinner. I just think that's weird. I don't know. But yeah, zero PR there. I don't know. Fahim, thank you so much for your very generous and kind $10 donation. This is for the rain the other night. Cheers. Thank you, Fahim. Appreciate you. Thank you for your support. Yeah, Mike Skate TV is like cereal for dinner rocks. Cereal for dinner is, I guess, enjoyable, but not for the reasons why many Americans are forced to eat cereal for dinner, for sure. This is kind of a cool shot looking all the way up 6th Avenue. You can see all the way past Radio City Music Hall. I know, Ryan Bex is like, seems like they are overdue for some common sense training, that's for sure. Hey, Kathy Lyons, what's going on? I guess Social Security is kind of like a universal basic income, but Social Security is a big Ponzi scheme anyway. TK Porsche says we can and will grow our way. My chat's messing up tonight, apologize. Out of the deficit, if Congress would force a balanced budget, Biden administration today proposed the next year's budget, another $1.8 trillion deficit. Yeah, I saw that. You know, I think at this point, you know, kind of piggybacking off of, you know, what we were signaling yesterday, I have no confidence in our government, both Democrats and Republicans, to do the right thing. It's actually, I'm at like on a scale of 1 to 10, I'm at like a -1. So I think it's more important than ever for Americans to just take matters into your own hands, because our government has essentially told us point blank that they're going to continuously debase our purchasing power, debase our currency by design. They've essentially told us that without telling us that due to all these crazy spending bills. They're essentially saying to the average American, yes, more and more of your paycheck is going to be eroded away by inflation by design, right? I haven't seen one piece of legislation that is productive in trying to balance the budget, reduce the deficit. So the more we spend, the more the currency gets debased, pretty much in perpetuity forever. And this isn't sort of abnormal, by the way. This has happened in every single country throughout history forever. We always talk about that book. It's a very, very good book if you guys want to read it. I wish they named the book something else because it turns a lot of people off from reading it. The book is called The Bitcoin Standard. Now, a lot of people don't read it because they're like, I don't care about Bitcoin, I think it's a scam. That's okay, you could think it is. Just buy the book or rent it at your local library or whatever, and just read the first half of the book. The first half of the book has absolutely nothing, zero, to do with Bitcoin. It's essentially just an entire case study throughout history of fiat currencies and currencies in general, starting all the way back when we used to have a barter system, right? Then when we used to transact with seashells, and then when, you know, the empire did the coin clipping, and that was a form of inflation, right? And in jest, all fiat currencies over time go to zero, all of them. In every single instance throughout life, all of them go to zero. So now, am I saying the US dollar is going to go to zero tomorrow? No, that's not what I'm saying. But over time, the amount of purchasing power your dollar has is going to continue to debase in perpetuity forever as long as we are alive. And I think you could thank Congress for that as well, also the Federal Reserve. Anyway, guys, this is a beautiful shot of one of my favorite buildings in the entire world, the Empire State Building. We're standing outside of the Bank of America Tower, and there's a lot of people out tonight, which is good to see. A lot of tourist activity because it's finally not windy and cold and rainy out. It's quite nice in New York. Peter says the only way you can force Congress to do the right thing is by term limits, so they can't buy votes in perpetuity. I agree with that. I generally agree with that for sure. It's like you got to let some new people get a chance, you know. John says, I don't understand why the government sends our tax dollars to foreign countries. How insane is that? Why would I ever want to pay taxes ever again? I think it's a lot of corruption goes on, you know. Malcolm says, I agree, Tom. Same here in the UK. I have no confidence in our politicians either. Now, the good news is this, right? America, I don't equate the United States of America with our politicians. What makes America great is all the people that are here, right? What makes America great is not our politicians. What makes America the greatest country on earth is the collective of humans who live here, who immigrate here, that create great products and services that make all of our lives better. And the good news is that people, by and large, are attracted to come to the United States to create businesses. Capital creation is widely welcomed here, and so long as, you know, to use Jim Ropel's words, the golden goose of capitalism continues to be forefront in the United States and we don't discourage investment, this cycle, this bull cycle, right, that doesn't mean the stock market's never going to go down again. What I'm talking about is the long-term duration of companies that are able to turn a profit, they're able to raise money, go public, and people like you and me are able to invest in America's greatest companies and build wealth over time through owning companies that crush earnings. So, you know, I think more than ever before, right, we can't be reliant on the government to say, you know what, when I retire, my Social Security is going to be there. This is, you know, I'm 100% confident in that. I think that ship has sailed. Now, I don't think Social Security will ever go away, but I believe we are at a point where we should just condition ourselves to believe it's never going to be there. And that'll force us to take matters into our own hands and be diligent and steadfast into investing in America's greatest companies, doubling down on our businesses, right? Maybe you're a small business owner. Maybe you have a job and you want to move up the corporate ladder. Whatever it is, I think we need to shift our focus and kind of double down on that, because our politicians are never going to do the right thing for us, in my view. Let's go into Bryant Park. We haven't been in here in a long time, and we have some more good news, everybody. The good news is the following. They are in the process of taking down the ice skating rink at Bryant Park. And pretty soon, before you know it, you're going to have that beautiful lawn right outside the Stephen Schwartzman building. And that means spring is right around the corner, which is very exciting. Zero says 100% agree. Term limits would help us have faith in the government again, regardless of what side you agree with. Now, didn't Warren Buffett propose something interesting? That said, if you put something that, if the budget wasn't balanced or something to that effect. I forget exactly what he said. I don't want to misquote him. But he said that would deem you uneligible for re-election if you kind of vote for these egregious spending plans. I don't know. There needs to be some sort of cap or some limit. Yeah, let's check out. Wow, this looks totally different. So here it is, everybody. This is Bryant Park. And they've officially removed the Winter Village and the ice skating rink. I feel like they left it up way longer than they ever did. Doesn't it seem like that? I mean, it's already March, what, 12th? And they're just now taking down the ice skating rink. Pretty soon we're going to be doing these live streams, and you're going to see them actually roll out the grass. The grass gets delivered here, and they roll it out, kind of like a rug. And then maybe in like 2 to 3 months this will open. It's kind of cool. Anyway, if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these every single night starting at 8:30. We'll do one lap around the whole thing and then we'll go to Hell's Kitchen. We got some time. So I guess we'll kind of shift gears because obviously today was inflation day, right? CPI day. Now, for those of you who are just joining, we'll go ahead and check out the CME Fed Watch tool. So if you type !CME in the chat, once again, that's !CME in the chat. That's going to bring you to essentially the model that predicts the probability or the likelihood of interest rate hikes or cuts at each given FOMC meeting. So you'll notice something interesting. Well, number one, there's pretty much a 0% chance that we get an interest rate cut at the next FOMC meeting. I always loved this shot of the Empire State Building from Bryant Park. I just really pray to God that nobody ever buys out one of these buildings in between 34th Street and 42nd Street and build like a super tall that's going to block this view. Because one of the best views of the Empire State Building is already blocked. But that's looking from the Flatiron District north. You can no longer see the Empire State Building from Madison Square Park anymore. which is unfortunate. Anyway, so just as a little bit of a quick review, the current Fed funds rate is at 5.25% to 5.5%. Here's some tulips here. And the next FOMC meeting is going to be March 19th through March 20th. If you go to the Federal Reserve's website, you could actually save the FOMC calendar, so you can kind of stay up to date and keep track on when the next time they have, a meeting where they set monetary policy. And I highly, highly doubt that we're going to get a rate cut this summer. Even though, the Wall Street Journal published an article today saying that even though we got that hotter than expected inflation reading, right, CPI, the headline number, came in at 3.2%, the article stated that it's unlikely to deter the Fed from cutting over the summer. I think I'm going to go out on a limb and disagree with that. Yeah, I think I'm going to go out on a limb and disagree with that, because it seems as if now we've created a floor in inflation. We all know, let's check out we'll go over here a little bit and explore Bryant Park under construction. This is weird seeing it like this. Look at that, that's exactly where the ice skating rink used to sit. It's weird seeing it in transition. But my theory is it's very clear that we've established this 3% floor in inflation. If you go back to June of 2023, that was the lowest reading we got at 3%, and then we've been bouncing around from 3% to 3.5%, back down to 3.1, then up to 3.2. That is telling us this is kind of the new normal. Any thoughts there? Trade says, hey Tom, I'm with you, no cut in June. Wouldn't be surprised to see an updated September, or an updated, my chat, that updates the dot plot. Yeah, I mean, my biggest concern with all of this is that if the Fed cuts too soon and kind of gives in, we're going to have wave 2 of inflation. And you don't want wave 2, because if you have a sweeping wave 2 of inflation, well, then we're just going to repeat the same thing that happened when former Fed Chair Paul Volcker had to come in and just absolutely obliterate everything by raising rates to 20%, which we don't want. I don't think it's going to get there. I think we have a very good Fed chair, believe it or not, even though my politics align with more of end the Fed style people, but I know that's really not possible. But if we're giving Fed Chair Jerome Powell a grade, I think he's doing as good of a job as he can with what he's got. And he's manufactured in an environment where interest rates have gone up, in terms of the Fed funds rate, it's gone up over 500 basis points, and the markets are screaming in the new highs. I think that deserves some applause. If we're being blunt, it's almost like he's a Tom Brady of Fed chairs. He took interest rates from near zero to 5.25% to 5.5%, kept unemployment at record lows, right? We have record low unemployment in this country. Stock market is rocking, right? S&P 500 in a new all-time record highs again, NASDAQ, the Dow. And, to be able to do that in such an aggressive tightening cycle, I mean, my God, pretty good. Now, it doesn't mean like it's going to stay like that in perpetuity, but I don't think he'd be foolish enough to start to cut before inflation's back down to that 2% target. We'll see. All right, let's exit Bryant Park here. This is the Bryant Park Grill. You're going to see this place really, really pick up in activity over the next couple months. And look at the ceilings here in the Stephen Schwarzman building. Really, really stunning here. Trades as the labor market is the main reason I think there will be no cut in June. Dual mandate has more risk on the price stability side. I think I agree with you. I think I agree. TK Porsche is aside from Elizabeth Warren. The Fed chair seems to be well respected in the congressional finance committees. I agree. I don't know. I mean, if there's something to complain about, you can, best believe Elizabeth Warren is going to complain about it. That's just kind of like par for the course for her. If you're not demonizing, American capitalism and free markets, and if you're not demonizing freedom, then she won't be happy. Someone says, does the Bryant Park Grill have an upstairs? It does not have an upstairs, but it has this beautiful outdoor seating here. This is getting me exciting. This is getting me excited for spring. Anyway, if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams almost every single day starting at 8:30. And just a quick note, since we do have a lot of new subscribers here, one of the greatest investment books ever written of all time is called Margin of Safety by Seth Klarman. Now, there was only 5,000 copies ever printed. However, if you want to look at an original copy of Seth Klarman's Margin of Safety, you can go right here in the New York Public Library's reading room, and you can reserve a time to sit down and read the book. You can't take it out of the library for obvious reasons because it's so rare, but you can check it out right in there. If you want to read it for yourself, you could just download a PDF version online, but if you want to buy the book, they run in the resale market from, I think, $3,000 upwards to like $10,000, dependent on the condition, the quality, if it's signed by Seth Klarman. It's pretty interesting. Joel PM's, Tom, I'm fine with capitalism, but only where we don't socialize the losses. I agree with you 1,000%. But unfortunately, the 2008 financial crisis totally changed the game, where it's created, in America, you have corporate socialism, essentially. Now, this used to be a WeWork office, and this was the most gorgeous WeWork I've ever worked out of. I don't know what it is right now, but my God, the inside of this building is spectacular. If anybody ever gets a chance to go in here, I used to work out of this building, and it's stunning. But you're right. So Joel PM, I mean, think about what happened during the 2008 financial crisis, right? With all the bank bailouts. You could say, hey, in free market capitalism, if you go bankrupt, if you take exorbitant amount of risk, right, and you go belly up, why should the taxpayers come in and save you, right? And that's exactly what happened in 2008. Now, obviously, we can go back and forth debating this forever. What if the government didn't bail out the banks? Would it have been Armageddon? Yeah, it would have been Armageddon, and probably, a lot of people would have starved and died. But, you can't set a certain set of rules where, bankers can take a ridiculous amount of risk and pay no repercussions. They still get their big bonuses, they still make multiples, millions of dollars, particularly a lot of these people who are trading mortgages leading up to the financial crisis. They all made millions, and they got to keep their millions while you guys lost your homes, right? And when I say you guys, I mean like the people, like me, right? I think that's very unfair. So, I agree. You can't privatize the gains and socialize the losses. That is what I disagree with vehemently, if that's even a word. So, All right, so we're crossing by the Bank of China here, and we're gonna blast all the way over to New York City's Hell's Kitchen. I think it's gonna be pretty lively tonight. Someone says, what was the name of the book? It's called Margin of Safety by Seth Klarman. Oh, hey.
We were just looking at you on
Oh, wow.
YouTube to say,
Nice to meet you, man.
David from Dallas.
Oh, David from
we
Dallas.
watch you all the time.
Oh, thank you so much. I appreciate that.
We love your show.
Hey, enjoy the city, guys. Thanks so much.
man.
I appreciate it.
All right.
Take care. Oh, those are nice people. From Dallas. Dallas, Texas. Love that. Vehemently. I'm going to take a screenshot of that. I'm trying to expand my vocabulary. Yeah, a lot of people are out tonight. Austin City Limits, as Tom did, the 2008 crisis affect any of your family or old friends? I don't think directly. Yeah, I mean, I don't really think directly my family. I mean, I was really too young to even really conceptualize what was going on, to be honest. If you think about it like that, because in 2008, I mean, what was I doing in 2008? What was I, in middle school? I don't even know. I wasn't even involved in the financial markets. At the time all of this was going down, I had zero idea what even a stock was, like zero. And nobody in my family worked in the banking business, right? I come from like a blue collar family. I don't come from white collar. Like there's not one person in my entire family was ever involved in anything like that. So, I mean, thank God I'm sure it affected everybody in some way, shape, or form in terms of the stress of you losing your job or something like that. But from what I remember, not really, I don't think. All right, Fashion Avenue, 7th Avenue. In the distance, you have the New York Times building. Now, someone briefly mentioned they were reading that book, Billionaire's Row by Catherine Clark. In chapter 2, I believe, there's a really, really cool story of the New York Times building, exactly how that building came to fruition. Now, I won't ruin it for everybody, but our good friend Gary Burnett, who's the CEO and founder of Extel, was in a little bit of a battle with another developer over that spot. I won't give the exact story away, but it's an amazing story. The way this city was built with all of these notable developers, it's kind of like a battleground in and of itself. Battling for air rights, intensive litigation. It's kind of crazy. So if you're interested in New York City real estate, in an aspect of how things get built here, what is the behind the scenes of actually building one of these super tall buildings, you got to check out that book, which is Billionaire's Row by Catherine Clark. Now, she's one of the, I would say, most notable Wall Street Journal real estate reporters or journalists. She's really talented, really talented person, so check it out. Brad's brain, I appreciate that. I don't even think there's dollar slice places that exist anymore. Everything is $1.50. You guys see that? What used to be $1 slice places, everything is now $1.50. That's inflation for you on CPI night. All right, we're now directly behind, oh, sorry about that. We're now directly behind the New York Times building. Now, a company that we talk about often, Datadog, ticker symbol DDOG, has their headquarters in this building. Not a big fan of the facade, though, of the New York Times building. It kind of reminds me of the Port Authority bus terminal, which is right in front of us, which just looks like a big eyesore. Gratz's, you just passed a huge shop sign, 99-cent slice. Yeah, but on the inside, if you look on the inside of their menu, it shows $1.50. Anyway, I guess it doesn't matter. All right, we've made it. This is the Port Authority bus terminal. This is not the best location, I would say. However, hopefully the city will revamp, rip and replace the Port Authority to make it a little bit more inviting for tourists and a bit better livable area. Because if you look at real estate valuations in terms of residential, right? We'll just talk about residential for a moment. A lot of these luxury condos that were built in and around the Port Authority, they're sitting on the market for a long time because nobody really wants to live right next to this big bus terminal, particularly with what has been happening over the last 2 years. What you're seeing right here is where a lot of the, well, not a lot, all of the migrants come to New York. So it's a big processing facility in there. Not the best place. But on a brighter note, hopefully, soon, the city will do a complete rip and replace, kind of like what they did with Penn Station, 34th Street, which they did a fantastic job, by the way. If you continue all the way down 8th Avenue here, you'll run right into the brand new Penn Station. Hey, Jenny Trickets is trading the CPI today. It was crazy. The NASDAQ consolidated yesterday, and today the opening wicked down, and it never came back. Hey, Dallas, it seemed like 1 in 15 houses on our block lost mortgage on their houses. Fastest growing county in California. What do you mean by that? All right, let's push towards Hell's Kitchen and Restaurant Row. I'll point out some of these buildings, the residential, which are luxury buildings, by the way, that have recently gone up over the last 10 years. Now, the problem is there's a lot of units in these buildings, 400 units and up, like 450. Some of them have even 600 units. Now, the problem in there lies there's only 4 elevator banks to service the whole building. And in some of these, I'll point them out. And that's been killing the resale value on a lot of them, because imagine, you have 600 people trying to use 4 elevator banks all day. Number one, it's going to take forever for the elevator to come. And number two, that's going to put so much wear and tear on the elevator that it's going to be down all the time. And not a lot of people think about things like that when they're first kind of buying something, particularly foreign buyers, because the only thing they see is, a beautiful view at Times Square, and they're like, wow, they're so mesmerized by the view that they don't really think about how they're going to get up to their apartment. So always make sure there's a good ratio between units in the building and the elevators. Now this is going to be a brand new development right here. I'm very curious to see how well this sells. I know, Mike sees this sounds like Miami. I'm not sure if you guys heard, but in addition to the, what's it called? The congestion pricing, they're gonna have cameras that can track how loud your vehicle is, and they're gonna hammer you with the ticket if your vehicle is too loud. Now, am I in agreement with that? No, I'm not, but it seems to be the way the city is going over the next few years. On another note, a lot of these, on the newsletter that we're going to send on Thursday, we're going to be covering a lot of the stocks that have now pulled back to their major moving averages and seem to be setting up again. One of which, you know, it's not a recommendation to buy or sell, but just as an example of kind of what we look at. ServiceNow, ticker symbol NOW. Great CEO, I would consider that a TML, a true market leader. Bill McDermott leads that company. And it's pulled back over the last 2 weeks on lower than average volume, which is what you kind of want to see. And we're starting to have a little bit more follow through. So I think it's important to pay close attention to the tier one stocks that have pulled back, given some back, tested some moving averages, and then hopefully as we go through the spring and into the summer, you can kind of see the next leg up after a lot of these correct here. This is the corner of West 44th Street and 8th Avenue. We're sitting right outside of the Shake Shack. And wow, is it totally packed. I mean, this is what is this, Tuesday today? I don't even know what day it is. I think this is a Tuesday night in Manhattan. And it's absolutely packed. Obviously, this is anecdotal data, but you know, people are out traveling. You know, how's the economy doing? Well, on a Tuesday night in New York, obviously the weather's helping a little bit. Whoa, look at these guys. I've never seen a horse trot sideways like that. That's so cool, right? Now, it's no wonder why a lot of these hospitality stocks are doing well. That's another big narrative buster, right? Take a look at Hilton, ticker symbol HLT. Take a look at Hyatt, ticker symbol H. These continue to break out into new highs. And I guess it makes sense, right? We included a few interviews with the CEO of Hilton in last week's newsletter. And they project that this year, 2024, is going to be the first year that business travel and business lodging, I should say, returns 100% to pre-pandemic norms. So I mean, think about that narrative. We had everybody saying business travel is never going to come back. Everybody's just going to be working remote. But it turns out business travel is as robust as it's ever been. We're going to be doing a follow-up piece this Thursday. If you guys want to sign up for free to receive all of our equity research, just go ahead and scan the QR code on your screen and punch in your email, and this Thursday, as the market closes, you'll receive our Behind the Street newsletter where we cover US equity markets, fixed income, and real estate. Robert Parker says, how about Marriott? Marriott too. I think Pershing Square owns a very, very big stake in Hilton. Hey, Theo says, Tom, I'm at a Hilton right now. Well, there you go. Theo, whereabouts are you traveling this time? Safe travels, by the way. Look at this brand new building in Times Square. That one actually looks pretty cool. All right, so we've officially made it to New York City's Restaurant Row. For those of you who are unfamiliar, if you go to the corner of 46th Street and 8th Avenue. It's right off of Times Square, just Times Square North, I guess you could call it. This is New York City's Restaurant Row. Another way that you know you're here is you see this huge sign that says Restaurant Row. So if you're in the city and you're going to a show, comedy show, Broadway show, really any type of show, and you're looking for a place to eat that's very close to Times Square, just come right down here to Restaurant Row. We might as well take a little bit of a walk through right now, and we'll then merge right into the Hell's Kitchen neighborhood of New York. This is a very fun neighborhood, by the way. Lots of nightlife, lots of restaurants, bars, a few speakeasies, a few very cool speakeasies are over here too. Cosmo Scary says Becco's over here as well. Yeah, Becco's here. You can get the unlimited pasta for 34 bucks. Not bad. Now, Cosmo, what is your take on inflation in New York City in terms of food away from home, right? So when you go out to eat. Because according to the data, I think food away from home on a year-over-year basis, I think was up like 4%. Excuse me, up 4.5%. So think about that on a year-over-year basis in the category food away from home. And if you want to see this as a primary source, just go ahead and type CPI. But that was the biggest category that stood out to me the most. Food away from home up 4.5% year over year. And I believe it. When you go out to a restaurant, it seems like everything's more expensive, particularly in Miami, right? We've gone over that lots of times. You know what I think about quite often? And I want to know if you guys agree or disagree with me. A lot of times when I go out, I just pay for like myself or one other person. And if you go to a dinner, 9 times out of 10, it's going to be over $100. Like every time you go out to eat, $100 or more. So it seems like what was like a $50 or $60 night out is now like $100, $120. Does anybody else feel the same way? So what I think about is, you know, how does like a family of 5, right? Let's say like a wife and three, husband, wife, and 3 kids, you know, go out to eat or something like that. I mean, that must be a really hefty bill. That must be like a pretty wild bill. I don't know. All while you have record attendance at places like Disney World and Disneyland, right? I mean, that's if you take a trip to Disney World for the weekend or Disneyland, you're probably going to spend like $5,000, right? Hey, what's up? Hey, good to see you, man. Nice to meet you. Oh, thank you. Have a good night. Take care, man. Jose says agree. Adventure says family of 5 or 6. Yeah, family of 5, 6 of them have to work, yeah. Jose says $30 or $40 for takeout. I know. Another thing that's been in the news lately is tipping culture. Now, for our European viewers, right? Many of our European viewers are unaware of tipping culture, but here, everybody has their hand out for a tip for sure. Someone's like in my area, it's like $30 or $40 a person. Yeah, maybe I have a skewed perception of reality because I spend the most of my time in New York. I get it, but Who Dat Dave says restaurant meal for 4 people, 1 bottle of wine, $250. It doesn't seem that bad. Look at this cool little Argentinian bistro here. I don't think I've ever been here. It looks really good. There's a lot of good Argentinian restaurants in Miami, particularly North Beach. Joel PM says, I don't tip for takeout service. Or you don't tip for takeout because there's 0 service. Got it. All right, let's do that poll in the chat. I think that'll be interesting. If you guys are ordering takeout, right, and you go to pick it up, are you leaving a tip or no? That's kind of the that's the question. If you're in a city or even in a small town wherever you are, when you order takeout and when you go to the restaurant and they give you the receipt and they have you sign on the dotted line, do you leave a tip or no? I'm very curious to see the answers here. Maybe we'll have a very bifurcated answer due to cultural differences. Meld says yes. Cosmo says never tip on those iPads. Dale says no. Tom M says no tip. Sharon says it depends if it's a small business or not. Fahim says it depends. Jay says I always tip for takeout, but just not 15%. Theo says yes, at least 10% for takeout. Interesting. Joseph Hardaway says no. It seems like we're split directly down the middle, by the way. Austin City Limits is a small tip. Wad Bank says yes, I tip 10%. Jonathan says I do tip, but I don't necessarily agree that you should. Now, here's what I do. If I'm doing takeout, very seldom, unless it's like a place that I always go to. And number one, I don't really ever get takeout. I usually sit down there and eat. But you know where I will always tip consistently? If you go to one of those little hole-in-the-wall, like neighborhood coffee shops in New York, I'll always give them a couple bucks, because I do believe that those type of places are kind of the bedrock of what makes New York like really enjoyable. Going to a local coffee shop, with some coworkers or clients. Unfortunately, we've had this cannibalization of big coffee chains like Starbucks and the like, kind of cannibalizing the smaller ones. I'm not knocking Starbucks, I get it, it's just business. But if it's those kind of smaller chains, I'll leave a tip for like coffee or something. Vegas 1 says 0 tip. Hey, Vegas 1, good to see you. 222 ain't says you tip 10% for takeout and 20% for sit down. I wonder what it must be like, you know, going to Italy, sitting down at a restaurant, and then at the end of the meal you just don't leave a tip. I'd feel kind of awkward. I don't understand how they make it work. Anyway.
If I happen to live
This is West 49th Street. You can see a lot of the bars here. It's a really fun neighborhood. Patrick D says, sup Tom, sup Patrick. Malcolm says, is tipping there to support the staff? It's not normal here in the UK. From my understanding, if you're a waiter or waitress, and if we have any waiters or waitresses in the chat, please chime in. From my understanding is that they make a lower hourly wage, right? So you'll make like maybe $5-6 an hour, but then you get to keep 100% of your tips or something like that, right? Which could be very lucrative, by the way. I mean, I've known, like had acquaintances and old friends be waiters at some top restaurants here in New York, and they were pulling like 75,000, sometimes 100,000, you know, in a single year, being a waiter or waitress at a top, you know, restaurant, right, where the average bill is, you know, $350. So that's a reality. Now this is an awesome shot from Hell's Kitchen, overlooking Central Park Tower and 220 Central Park South. Best Maddox says nobody makes $5 an hour. I don't know. I thought that's kind of how it worked. I think your hourly is lower and then you get to keep all your tips. Maybe that's not how it works. I don't know. Hey, John G, what's going on? Melissa says, I used to be a server/hostess. We made like $2.13 an hour plus tips. Sea Devil says, please Tom, show us the restaurant on the northeast corner of 9th Avenue and 51st Street. 9th Avenue and 51st Street. Okay. Hey, Joel PM, thank you so much. So speaking of tips, I think you deserve this one. Thank you, Joel PM, for your very generous $5 donation. Appreciate the support. But so far, what are you guys thinking about Hell's Kitchen? Different vibe, different environment. You see a lot of these pre-war buildings. I mean, what a contrast here between all of these low-rise buildings with the fire escapes, and then in the background, you see those massive mega-tall skyscrapers on Billionaires Row. Now, back in the day, right, when my parents were my age, or maybe even a little younger, this neighborhood didn't used to be too pleasant. And now it's like very, very safe. It's known for its nightlife. But back in the day, apparently, Hell's Kitchen didn't used to be the best. But just along with every other, you know, neighborhood in New York, there's been a lot of gentrification, so, which I think is a net positive. Man, some of these places seem brand new. Cosmo, you have any go-to places to eat here in Hell's Kitchen? Speaking of a dollar slice place, you got one right over there. Theos is extremely cool. I like it too. It's cool. I mean, look at this. Some of these buildings are so old. 1890. A lot of these buildings were actually horse stables at one time. All right, this is 9th Avenue and 51st. You know what, guys? Maybe we'll push all the way up to my alma mater. You guys can see where I went to college back in the day. Excuse me? Man, look at that. I think the further you stand away from Extel's Central Park Tower, the more you realize just how massive it is. Lee says the Irish mob used to operate in Hell's Kitchen. Indeed we did. I'm just kidding. I'm just kidding. Hey, Lee's in the chat. Lee, I was going to message you today. What are your thoughts on all of the crazy stuff that's going on in Haiti? Now, I was reading a breaking sort of news story across Reuters, and apparently due to the, essentially the takeover that's going on in Haiti, and I'm not an expert, I don't really know what's going on, I'm just reading the news, it's causing massive flight out of the country. And the state of Florida is expecting a massive wave of Haitian immigrants to the shores of Miami. Any thoughts there on what is kind of going on, how that's going to have an impact on the state, on the country?
Here's the thing, it was more like...
It feels like every day that goes by, there's more geopolitical mayhem. I mean, just to be quite blunt, right? I mean, it feels as if a new conflict, a new war, a new something is popping off every day. All right, we are approaching, coming up on the John Jay College of Criminal Justice, which is a part of the CUNY system, which stands for City University in New York, not to be confused with SUNY, which is State University in New York. At least as we survived when Castro did it, we'll survive this. I agree. I think that's a good take. Now I hear they're doing some major restoration on the Freedom Tower down there in downtown Miami. It's one of my favorite buildings. I think that's where the highest concentration of Cuban immigrants came to America. Wow, this place used to be a bar. West 56th Street and 9th. This place used to be a bar back in the day. Back in the day, I'm talking about like 5-6 years ago. Now it looks to be a really nice bodega, like a deli. This is going to be a little bit of a walk down memory lane here. Now, I remember when my freshman year, that was the first year they completed the new building at John Jay. So what they do is they put all the freshmen in the new building to get them all excited, and then sophomores, juniors, and seniors, you go into the old building, which when I went, it was in total disrepair. I think the building is condemned now. I believe it was called North Hall. I'm not sure if we have any John Jay alumni here, but the building was called North Hall, and there was no AC, and it felt like you were in, you know, one of those stereotypical kind of sitcom shows in the 70s where the high school was, you know, very hardened, let's say. That's kind of what the interior looked like. The building is either condemned or the city bought it back and now the NYPD uses it. I don't know. We'll take a walk past it. Now you have Mount Sinai Hospital right down here too. So for some context, right here is 59th Street, Columbus Circle. If you continue to walk straight down here, you can see 220 Central Park South, Central Park Tower. Yeah, TK Porsche, that was last night's diner spot. This is the graduate school. And if you continue all the way up to 66th Street, that'll be Lincoln Center. TK Porsche is any good? Yeah, that diner's pretty good. It's one of the only 24-hour diners left in the city, unfortunately. It's called The Flame. I used to go there all the time. We used to obviously study late night in the computer lab over here and then walk to the diner. Mark says, what year did I graduate? Whew, I don't even know. I mean, this was many, many moons ago, my friend. Let me think. I think I was class of 2018. I mean, this was so long ago. I think I was class of 2018, I think. Hey, the Wizard, what's up? This is, can we show the soccer fields again? Yeah, if we have time, we'll definitely show it. This is the surgery. This used to be the emergency entrance, I believe. Maybe they relocated it? Or maybe it was on the other side. One of them used to be the, right here, emergency room entrance. All right, so right to the right, this is North Hall. And they still have all of the John Jay insignia. But man, the inside of this place looked like a prison from what I remember. as you could tell. This was the inside of the college. It doesn't look like, it looks like a very beaten down, run down high school. I may have to plug my phone in a minute. You could see all the window ACs. None of them ever worked. It was always 90 degrees in here. Here it was. John Jay College of Criminal Justice. Yeah, the building is now closed. TK Porsches, it looks like a police station. It kind of does. Well, John Jay is a cop college. Back in the day, it used to be an all-men's school. It used to act as an academy for the NYPD. And this is what it used to look like. Now the building across the street, it's called the T building. Now it's funny, I'll tell you guys a funny story. But first I gotta plug in the phone so it doesn't die. All right, it's the first day I was ever here. A little bit better now. But the first day I ever came here, sort of like the first day of class, there was no scaffolding on this building. It actually looked really good. The second day, all the scaffolding went up. And for my 4 years being here, I never was able to see this building without the scaffolding. And now they did a full restoration on the facade. Yeah, but that's in the North Hall. It does look like a prison. But this building actually looks quite nice. It's called the T building. I think they did a great job on the restoration. So this is now 10th Avenue. This is way, way far over. And we'll go all the way down to 11th. And you'll see the brand new building. I believe it's 15 stories. It's all state of the art. Total glass facade. And it has actually a lot of forensic science laboratories in the building. I believe, I don't know if this is true, but I think the NYPD has one of their forensics labs right here. But I only ever had classes there as a freshman. Sorry to bore you guys with this information, but we're coming up on the end of the stream. You might as well check out John Jay. All right, so now this is the transition to the new building. You could definitely tell the difference. Looks a lot better. Now, if you guys ever watched the show Blue Bloods, not Blue Bloods, I forget. Law and Order. They film a lot right here. Right in this little corridor here. From the T building over to the new building. You probably will notice some of the backgrounds. They film it here at John Jay College. And this was the computer lab right here. I spent many hours. Now, pre-COVID, this was open 24 hours. I would sit here in the corner and just binge all of the global macro stuff. Like Peter Schiff, all those guys. Looks the exact same. They just closed it down early because of the virus. Oh, is that right? Someone says most of Stony Brook University looks like a prison? Really? Interesting. You'll notice all of these brand new developments here. All along the West Side Highway, you have just incredible new development. And it didn't used to be like that, right? When I was going to college here, all of these buildings, particularly these ones were built, but the ones all along the West Side Highway were just under construction. I would say from 34th Street, Hudson Yards area, all the way up to 59th Street and 11th, looks totally different just over the last 10 years. Ultra luxury condos have been built, tons of development. A lot of new product have come on the market all along West End. Elias says, how were the parties? There's no partying at John Jay College. It's you go to class, you go home, or you go to work. There's no, it's not really even like a college, it's just a building, that's it. So here is a classic example of what I'm talking about. This is One West End. You could go on Street Easy and look at what these apartments look like. I mean, really, really nice stuff. All of them have great amenities. It's totally different here. I think you have 57 West, should be to the left of us. A lot of car dealerships too. So this is the facade of the new building. I think it's 15 stories. Now this right here, I believe is the registrar. I remember that because that's where I had to go pay the tuition, right there, on the second floor. And there was not a single time, not one time, that John Jay was correct with the invoicing. It was always a fight. Hey, Michael, what's going on? Thanks for joining us. Now Now this is headed down towards DeWitt Clinton Park. This is where a lot of the athletic teams would train over here. Oh, Michael Welsh, what's going on? Trust you're well in Puerto Rico, right? Didn't you buy a place down there? You have BMW and Mini of Manhattan. Tons of car dealerships down here. You're gonna see Volkswagen. I think Toyota's down here too. So like all these developments are new. They really built up this entire neighborhood. I think we should have the light. If anybody here is looking to move to Tribeca, by the way, or knows anybody who's looking for a 3-bedroom apartment in Tribeca, well, I have one listed that we're looking to move as soon as possible at 5 Franklin Place. So if anybody's looking for a spot in Tribeca, feel free to reach out. It's a nice building, 3-bed, 3-bath, just under 2,000 square feet. You have a pool on the roof, and you could be neighbors with the former New York Ranger. Whoa, we've already been streaming for 2 hours. Guys, I think we're gonna cut it off here because it's getting late. Thank you all so much for coming. Appreciate you coming along for that little detour. If you enjoyed the stream tonight, feel free to leave a like on the video, subscribe to the channel if you're new, and we will talk to you all tomorrow. Thanks so much for discussing inflation with us today. Thursday, we will be sending out our free investing newsletter called Behind the Street. We're going to be talking about a lot of stuff. We're going to be covering emerging markets, fixed income. We're going to be doing a complete monetary policy outlook. Obviously going off of what the inflation numbers reported today. So if you want to receive that, just scan the QR code on your screen, punch in your email, and I'll see you guys tomorrow. Hopefully you enjoyed that kind of walkabout Hell's Kitchen and John Jay College. See you guys tomorrow. Soho Joe, Robert Parker, Richard Vogel, Vegas 1, Hawaii, Kindness, Sally, all of our moderators, Lance, Mohammed. Appreciate everybody. See you all soon.